Hey everybody, Jimmy here. Welcome back to the channel. In today's video, I want to jump into the topic of day trading, and I want to talk about why it's so hard. So as many of you know, recently I've made a couple videos about day trading strategies. You can check those videos out here and also here. Watch those videos, see what you think of those strategies, and then maybe this video will make a little more sense. But when you're day trading, it's so difficult, in my opinion, to be consistent that I can see why it discourages so many people. It discourages me from time to time because I come up with strategies, I back test them, I get really deep into them, and then I find out they just don't work. And if they do work, it's sort of 50-50 or less than that. So it got me thinking, why is day trading so hard? Why do people fail at it? How can you be consistent or more consistent? And then how do you take that consistency and turn that into something that's profitable? Because what's super common is being a little consistent, making a little bit of money, and then ultimately just giving it all back in one loss. So I wanted to dive into this topic, and I wanted to share my thoughts as far as what I think makes day trading so hard. So let's go. So I want to jump into 3, 4, 5, 6 different reasons as to why day trading is so tough and why most people fail. And I think that the biggest factor, I'm actually going to save that one. Yeah, let's do that one last. Let's do the first one. I want to talk about compressed time. So with compressed time, you have this little tiny baby window, maybe 10 seconds, maybe 1 minute, maybe a minute and a half. Day trading can be very laser, very scalpel-like, surgical, in and out. And if you're wrong, you have to get out or you'll get whipsawed to the other direction. So to prevent that, you put in a stop loss, or maybe you have a mental stop loss that keeps you protected if something goes against you. So you're dealing with this really compressed time that makes accuracy critical. Now, if you buy a stock, let's say you buy Uber, and the first day you buy it, it goes down. You think, oh, okay. You wait another day, maybe another week, and then maybe it goes back up and you make a little bit of money. That's not compressed time. That's more free flowing. You're kind of allowing more time to make you right. So when you're compressed into this little pocket of time, things can go wrong, and because you have to declare the loss immediately, you can't just wait it out, because usually you're carrying larger share size because you're looking for a smaller move when you're day trading. So that's my first thought. Compressed time creates a handicap for people. It causes disruptions and problems, because I know that many times I have put on a day trade, got stopped out, and then immediately after that, the stock goes back in my direction and it would have been a winner. But the problem is, because of my share size, I wasn't able to wait out the pullback or wait out the dip. And I get it, you need to stay small, but in order to make any kind of money, you can't just trade one share. You've got to be able to trade enough share size to make it worth it. And if a stock goes against you, you have to wait that out. And if you're ultimately wrong after you wait out a dip or a pullback, you could end up having a sizable loss, which could wipe out many different wins that you may have had in the previous few days. Number 2 that I want to get into today is emotion. We get emotional when we're trading a high pressured environment. Like I said, back to my old example, if you bought 100 shares of Uber and you just sat tight on them, chances are your emotions not going to get the best of you, because I feel like when you put on a trade for the long term, you sort of accept that it's going to ebb and flow. It's not final. And that's kind of the definitive line there, is that you put on a trade, it's fine, it goes down, it goes up. In the future, you'll make money. But with a day trade, you have to close it today. You have to close it at some point. So if you're down, you have to take that loss. And the thought of the loss causes you to be a little bit more emotional. So a lot of times your heart's going to be racing. I know the first time I put on a day trade with any kind of size, I was breathing heavy, my heart was racing, and as soon as I got out of the trade, I was kind of sweaty, and I was like, oh man, that's just kind of tough. But if I buy, 50 shares of a stock I like and I'm going to hold it, I'm not nervous at all, because I sort of know the objective of the trade. I know that I'm in it for maybe the long haul or maybe for a few months. So I think that emotion combined with the compressed time creates a very strange environment that can be less than ideal for consistently making money. We're getting closer to the last tip, my main point, but I want to share something else, which is unrealistic expectations. I think when you're day trading and you put on larger share size and you're looking for that 30 cent, 40 cent, 50 cent move, You've got a stop loss in place. It starts to work. Things are looking good. I think a lot of people switch into the mentality of, this is such a high pressure situation. Why not just hold longer and really hit that home run, really get a big move to the upside and make a lot of money? So you're looking for that home run. Your expectations are unrealistic. Maybe you're setting your target at a too high of a ratio, risking 1 to make 2. Then maybe you start getting a little more greedy and you start trying to risk 1 to make 3, and then it goes against you. You don't get to 3 and then it fails. You're not taking profit quick enough. And I think that that can contribute greatly to why it's hard to be consistent as a day trader. And then finally, this is the big moment we've all been waiting for. This is my biggest thought on this subject, and this is the realization I've come to after backtesting a bunch of different strategies and understanding that no strategy works all the time. And really no strategy works really better than 75%. If you said you had a strategy that worked 75 or greater percent of the time, I would really have to see your backtesting, because that's almost not believable in my opinion after just seeing a lot of different strategies. So my thought is it's gotta be 50-50. A lot of strategies are kind of in that 50-50 range. If you create boundaries and rules and you say, if this happens, then I do that, I wait until this, and then I do that. So you kind of create an algorithm as far as putting on this trade. And then once the trade's in action, you know what your take profit is and you know what your stop loss is. And I think the biggest thing, the number one thing that hurts people who are trying to day trade is they aren't able to trust the process to accumulate enough trades to have the numbers or the data prove that it's profitable. So I'm gonna give you an example. Let's say you have a strategy that's 50-50. You're right half the time, you're wrong half the time. That's not bad. We can work with that. That's okay. So what you do in that scenario is you adjust your price target to be multiple. So 1.5 risk units. Let's say you're risking $50. You're gonna risk 50 to make 1.5 times that loss. So when you put on the trade, you're looking to make $75, but if you lose $50. So when you look at that math, if you win 5 times and lose 5 times, that's gonna come out favorable for you. You're gonna be profitable. So let's say you put on a trade, you back test it, your win rate is 50%, so you put it in action and you lose $50. Okay, you see the setup again. You jump in, you lose $50. Okay, you do it a 3rd time and a 4th time and a 5th time. Let's say the 6th time you lose. Now you're down $300 and you're sort of a novice trader and you're thinking, what am I doing? Are you gonna put on another 30 trades? What if you lose the next 6 or 7 in a row? Let's say you lost 10 in a row. You're down $500, risking $50 as your one risk unit. So I think a lot of people take a few losses and then they can't wait it out. They can't keep going. Or maybe they win a couple times, get pretty amped up, and then hit a string of maybe 8 or 10 losses in a row. 8 and 10 losses, that happens. You might get 20 winners in a row. You might hit 10 losers in a row. You might hit 20 losers in a row. But what they're saying is, if you put on 1,000 trades, you're probably gonna win 500 of them and lose 500 of them. That's a profitable strategy. That works. The problem is, they come in runs. It's not always win, loss, win, loss, win, loss. If that were the case, it'd be so easy. If you knew that you were gonna win every other trade, and that's just how the numbers went, you'd be good to go. But it's when you hit 15 losses in a row and you start to go, wait a minute, I'm questioning my ability here. I'm questioning what's going on. All I'm doing is seeing money leave my account. I don't like this. And then they quit. And it's easy to talk about because, you could say, well, Jimmy, I don't have thousands of dollars to just throw away to hope that I prove that I'm right. And that, I think, is the ultimate problem, is that if you do catch a couple runs of losers, it discourages you and you step away from it, and you're then part of the 90% that don't win as a day trader. Now, I don't usually talk about other channels during my videos, but one person who is interesting, and this isn't to promote anything or to get into any of that, but Ross Cameron over at Warrior Trading, if you look at what he's doing, he keeps all of his trades in TraderView, and which is a website where you can track all your trades, your metrics. You can basically upload your trades from TD Ameritrade or whatever platform you're using. You can just upload those right to TraderView, and it'll give you all your metrics. Now, he's got tens of thousands of trades, and he can go back and filter and sift through all of his trades. And the reason I bring him up is I saw a video recently of his where he was going through his trades and he was able to look at his win rate. He was able to look at what time of day he's most profitable, what day of week he's most profitable, what time of the year. He can really break it all down because he's got the numbers. Now, if he had that same TraderView account and he only had 60 trades, all those numbers would really be invalid. It's not enough occurrences to be able to sort of tease out trends and find, I don't know why I just did that, tease out trends and find ways to move your strategy in the right direction, because you have to have enough occurrences, enough in. If you're familiar with statistics, you have to have a statistically significant in, which is the number of occurrences. You know, if you study in the medical world, which is where I come from originally, you can't say that a study that looks at 5 people and has a particular result, that study's not valid in terms of applying it to the masses. Those are just sort of case studies. Those are interesting thoughts, and there's future information to be built upon there, but you can't accept it globally because statistically it's too small of a number or pool of people of testing. So for Ross Cameron, he's got tens of thousands of trades. He can say definitively that yes, he trades accurately. You know, his win rates, I think, right are in the low 70s. He's right 70% of the time, and he has all that data to back it up. So when you're starting out trading, it's hard to accumulate enough occurrences to be able to prove that you're right. And this can be where a paper trading account can be very valuable. I know that we don't get emotional when we're paper trading, so that can cause an issue because it's a very different ball game when you're actually putting live hard-earned cash to work. So what I always say is maybe even just go in and buy very small amounts of shares, like a couple shares or 1 share. Being that commissions are removed from most of the brokerages, it makes it a little easier now to go ahead and just buy 1 share or 2 shares. See if it plays out, record it. Upload all your stuff to TraderView and look at the metrics and get a few hundred occurrences before you ever risk any real money, you know, just small amounts of money. Before you increase your size, maybe you put on 1,000 trades. I mean, that's a legitimate way to do it, but I think people get impatient with the process. They get 10, 15, 20 occurrences, and maybe it's going okay. They ramp their size up, they hit a streak of 5 to 10 losses, and then they're done. And that's where I think people go wrong. That's where I think I've gone wrong in the past, is I backtest a strategy, something's looking good, I start to define the boundaries of the strategy, and then you hit a string of losses and it just demotivates you. It just knocks you down and it makes it hard to stick with it. And then you want to jump to another strategy. And I think that's ultimately where you're finished. When you leave a strategy to start hopping from strategy to strategy, you get beat by one, you move to the next. You get beat by another, you move to the next. And before you know it, you've just done a whole lot of nothing. You've accumulated no occurrences in any strategy, and then ultimately you just quit, and that's it. So why did I make this video? To say, let's get some occurrences out there. Let's rack up some trades. Let's trade really, really small. Find that strategy that works for you. Hone that thing. Put in the occurrences. And then once you have 1,000, a good sample size in play, you'll know that you don't have to care if you hit 15 losers in a row, because you've back tested this over 1,000. You've put in 1,000 live trades. You know it's gonna work. It's just a matter of time. Statistics says so. Now, if you're new to the channel, hit that subscribe button and stick around for a while. Also, if you want to help the channel out, give me that thumbs up. It'll really help the YouTube algorithm. It'll really help promote the channel. I would really appreciate it. And in the comment section, if a strategy has really discouraged you before, I want you to comment right now. Just say yes. Now, if this hasn't happened to you and you've just been uber successful, say no. But jump in the comments, give me a yes or no whether or not you've been discouraged in the past by a particular strategy. And feel free to share the strategy with me. I'd love to hear what you've been working on. If you've been backtesting a strategy like crazy and you're feeling good about it, let me know that too. I'd love to hear about it and maybe offer up any help if I can be of any help. Maybe not. Anyway, thanks for stopping by, and we'll see you next time.